afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a breakdown of what went down in today's session. A slight bounce for the Nasdaq today after heavy losses in yesterday's session, and a day of outperformance for the IBD 50, at least.
Yeah, it was a decent day for growth stocks, Ali. Nvidia, Snap, and AutoNation, which I probably wouldn't be considered a growth stock traditionally, they're all doing fairly well today.
Okay, well, we will check in on those in addition to providing IBD's perspective on the major indexes. So here we have the Nasdaq Composite finishing the day up about 0.2% in a mixed session. The Russell 2000 also up for the day by about 0.4%. And on the downside, the S&P 500 and Dow down about 0.1% apiece. But at the very least, I guess it's good to see that the Nasdaq was up today, whereas yesterday's action was not all too good. Maybe a little bit of a glimmer of hope in the final 30 minutes of yesterday's session.
Yeah, and you combine yesterday's close with today's modest move. I mean, it's better than nothing. But I mean, we did close, while this is showing 0.6, it's a little delayed. You know, we only ended up 0.2%. We sort of got near the 50-day line, basically got to yesterday's intraday highs, which was a gap down, so it wasn't really. So, I mean, if we'd fallen below yesterday's lows, you know, there probably would have been a correction call. But we didn't really change the character. Are we still in a downtrend? Yes. I mean, if you drew a line from the top, you know, no matter how you did it, no matter how tightly you did it, we're not breaking that yet. So need to get over the 50-day line, and the Nasdaq looked better than the other ones. Of course, the S&P didn't even think about getting to its 50-day line today, and ended up down. So that was a really weak close, and the Dow has been below that for a while. And the Russell, I think it hit resistance around its 200-day line. So again, it could have been worse, but low volume. Very low volume, low mixed bounce, you know, at best. So, you know, not a whole lot of reason to be jumping in. I mean, we're going to look at some stocks that acted fairly well, but there's not really, I would say, a reason to really get into this market. I mean, if this market has legs, if there's a reason to get in this market, if it's going to go for 2 weeks, 3 weeks, 6 weeks, then you're going to have other opportunities. But if this is a 1 day or a 2 day or a 3 day bounce and we roll over again, well, you're not going to make any money in that probably. So I just think that, you know, there's not a whole lot of reason to be adding exposure at this time.
Right. A little too early. We need more signals of that confirmation that we are headed back higher. So we'll have to wait to see if we do get that. But as we mentioned, FFTY, which tracks the IBD 50 list of leading growth stocks, up 1.4% today. So that is another good sign.
Yeah, and there's some stocks that are really high flyers that are right in that index. I got to say, if you were thinking about buying anything, buying an ETF like the FFTY or something more broad like the Qs, might be one way to just try to take a tiny nibble on the market. Again, even then, if we roll over, and it's probably not going to be great action in there. But that's one way to play it. And FFTY at least shows that growth stocks had a decent day, but you're going to need more from the broader market in order to really feel confident that growth stocks will continue to move higher.
Right. And speaking of taking a nibble with an ETF to get market exposure, the 3 stocks that we are going to take a look at with the interesting action that we see, how should investors approach adding to existing positions or initiating new positions with the backdrop of a shaky market environment?
I would be really cautious. And it's like, you also have to think about how quickly do you get out? I mean, you may be aggressive, but are you aggressive to pull out? But if you know yourself that you go like you hang around a little too long, well, that also means that, you know, you need to be set up really quick stops, because we could easily reverse. So, you know, if you're going to do it, know yourself. If the market reverses and you suddenly are down 4 or 5% on some of these things and none of them are working, and are you the type of person to quickly get out? And if you're not, then you probably really should be just waiting for more strength.
Yeah, it's one thing to enter in an aggressive position when the market's in a confirmed uptrend. But if you are looking at some of these entries when the market's on shaky ground, need to really be paying attention. And with that said, let's take a look at Nvidia. Of course, one of the leading stocks that we've been closely following this year, coming down to its 50-day line, some nice support in yesterday's session and a little bit of a bounce today.
It was a little bit of a bounce. It's interesting. You probably could argue, like, look, yesterday's action came down, found support in a nice area, but it was also round trip to double-digit gain because that 50-day line was just below, I believe, the 207.43 buy point, which means that, erasing a double-digit gain at that point, that's a pretty strong sell signal. You don't want to take a 10% plus gain and that turn into a loss. And now, yes, it did bounce, but you want to get out. You usually want to get out of a stock in that situation. That being said, it found support at a place where you would find logically to it. Maybe if it bounced above Monday's high, which it didn't quite do, if you were really aggressive, you could say, I want to nibble here, maybe initiate a position, a tiny position. I still think you could argue that maybe you want to go over some kind of really tight trend line, getting above the 21-day, getting up somewhere there. Maybe that would be something a little more strength. But, it's nice to see that bouncing a little bit. Probably would want to see a little more strength in this one.
And a follow-up on our recent discussion of this as well. So if you had a lower cost basis, of course, if you were holding from May or sometime in 2020, you can treat the position a little bit differently than a new buy out of this cup with handle here. And as a reminder to everyone, Nvidia is on leaderboard and has been since April of 2020. And let's also take a look at Snap. This one has bumped its head up against a trend line for quite a while. Now today, clearing that area with a 6% gain, Ed, and it looks like the stock closed pretty well too.
Yeah, strong close. The volume wasn't up, but it was better than yesterday, which is not so bad. And it traded pretty well yesterday, all in all. I mean, sort of found support around the 50-day line. I'm not going to lie, Snap has done some head fakes. A lot of growth stocks have done head fakes. And if the market is in a downtrend, maybe head fakes is the best you can do. I mean, for the main, I mean, there's some stocks that are just skying through anything, and that'll always happen. But so triggered that trend line, you drew that, you had the same thing that I had. And so you could definitely use this as an early buy point off of that, off the 50-day line. But just know that, if it is very aggressive in this kind of market.
It is. And we were pointing out the earnings gap as a buying opportunity. And depending on how you size that position and your risk tolerance, maybe you opted to hold because it still hasn't had a decisive break of the 10-week line, was able to close higher last week and some tight areas as well as it's been building the space, but a notable development in the chart today, no doubt. And Snap as well is on leaderboard. And last but not least, let's take a look at AutoNation here, Ed, seeing this RS line blue dot on the daily chart and some exceedingly strong gains in recent sessions.
Yeah, that's one reason. Maybe you'd like it to have a pause. It would be nice to see a pause in this situation because when you run up almost straight from the bottom, there's just a high risk of a pullback. And it's great if you can do the pullback before the breakout, get that shakeout. So it'd be great. Maybe it'll happen, maybe it won't. The RS line hitting a new high, that's really bullish. And now stocks having, the one nice thing about the market not running is that a stock can pause for a little bit and not have its RS line deteriorate that much. And you obviously new high there. And Nvidia and Snap had pretty good RS lines too, but RS line at a new high before it breaks out is really bullish.
That it is. So ideally, we see a handle here.
Ideally, you'd see a handle here. Not saying we'll get one, but if the market's shaky enough like it is, that would be something to do. Shake out some weak holders and then break out. So that's just something to watch for. They did name a new CEO today. Took the head of the U.S. head of Stellantis to come over and take over AutoNation. Used car prices are hot. Nobody's making new cars, so there's a reason why some of these stocks in this sector have been doing really well.
And could you also make an argument? I'm just wondering about one of those draw the line breakouts. We also have this round number of 120 and a lot of trading action that happened just under that level. So maybe in buy range from that, but once again, it has gone straight up from the bottom.
Yeah, you probably could have drawn a trend line too from the top and gotten something a little below that. So sort of capturing the bottom of that day or something, or yeah, or the bottom of the day or somewhere around that area. So you could have argued some things about trend lines, 120. If we can get it, that's why a handle would be really nice right around here, right around that 120 level, right around the buy point. This might actually be oh no, it's not quite a closing high, but it's right around those areas. So definitely one to watch. The growth has been tremendous. Yeah, the growth has had some easy comparisons. Yeah, used car prices probably aren't going to continue to skyrocket, but the business is doing pretty well right now.
All right. Thank you so much, Ed. AutoNation is a member of the IBD 50, and it was our stock of the day on Tuesday. So a nice roundup for everyone there. And Ed, I guess just a quick reminder for the audience, given that market conditions have changed between last week and this week, what should the mindset be heading into tomorrow?
I think you still need to be fairly defensive. The market is under pressure. We're probably closer to we're still not that far from breaking down and really hitting new lows. And so probably should be thinking more about, do I want to be selling rather than buying? But being flexible is key. We surge, we move higher. You have to be able to change your mind very quickly, either be buying stuff or selling stuff, depending how the market moves. It's definitely a market in flux right now.
Mm-hmm. Flexible and open-minded. We can never forget that. All right. Thank you for the reminder, Ed. And thank you all for tuning in. We will be back with more tomorrow morning on IBD Live, our daily morning live stream where we're sharing our screens, talking about actionable trade ideas, buy rules, selling lessons, so many things that you can take with you beyond the live stream. And of course, our up to the minute take on current market conditions, looking at those intraday charts. So we will have more of that for you tomorrow morning. So we hope you join us, investors.com/IUD Live. We'll see you there, and we'll see you right back here tomorrow after the close.